What's up? This will be like another market outlook video, I guess. And this is the same song. But basically, I haven't made a video in a while, so I guess I'll just talk about stuff, I guess, since where I last left off. I don't really know where I last left off, so I'm just gonna start talking. But basically, I stopped posting videos because I was just holding my positions, and then the war happened and stuff, and I got very opinionated, I guess, and then I lost quite a bit of money. But I do think this video is kind of to solidify, I guess, my beliefs, I guess, and then fast forward like a couple months, if I'm right or I'm wrong, I'll like analyze this video, I'll analyze some other stuff I wrote, and see where I went wrong. I mean, and if I lose this, there will be a little chance at a rebound, but I am kind of betting big on this because I really do think the rules, like there's like fundamental rules of trading, right? The first rule I would say is don't be wrong, right? If you're always right, then you will always make money, right? It doesn't matter, nothing else really matters, right? And then the second rule I think is risk management, right? And risk management is for when you're wrong, right? So I am kind of throwing I'm not using rule 2 as much as I probably should, just because I feel like opportunities like this are kind of rare, and the markets are very volatile, and the geopolitical is very volatile, and basically there's a lot to lose and there's a lot to make. But right now I do think the market's being complacent, so I guess I'll bet big against that, right? And I'll explain why I think the market's being complacent now, I guess. And first I'll talk about the mistakes that I made. So basically, when we entered this consolidation phase, I think I flipped bearish. I don't really know where I flipped. Oh yeah, I flipped bearish whenever crypto crashed. So crypto crashed like Jan to Feb. So this is basically when I turned bearish on the stock market. So like Jan, Feb, like here was when I turned bearish, and then I got even more bearish when the war started. Because basically here I was expecting like a 10-15% correction, and then the war started, and I was like, okay, we have all of these things in place for the business cycle to end. For example, all right, this is gonna be kind of hard to all right, yes, this. So I mean, obviously this is not I mean, you can make arguments for why this may not be the best, but let's say we have a weak job market, and the weak job market can be seen by the employment population ratio, which some can say is like a proxy for unemployment or whatever. But I would say might be more important than unemployment, because it's less hard to manipulate. Like if you look at the unemployment rate, I mean, if it's not gonna, alright, that's weird. Whatever. If you look at the unemployment rate, I mean, we've been trickling up, but recently we've just been flatlined the past like half year, right? Past couple quarters, and this is pretty rare, where we go up and then we go back down, right? So I mean, usually it never happens, right? And the reason why I think it's been flatlined is, Well, if you look at this has actually been continuing to go down at like a pretty fast pace. And the reason is because the unemployed people are leaving the labor force. So, I mean, I don't know if we're talking about older unemployed people that are leaving the labor force. I mean, the data kind of points towards that, but it doesn't change the fact that unemployed people are leaving the labor force. So these people were unemployed and then they left the labor force. And I think that is putting unemployment in a better light than it should be. Because if this was actually the unemployment rate and we flipped it, right, this would be a scary trend in my opinion, right? So I'm just gonna make the argument that the job market is weak, right? And the Fed has been confirming that by cutting rates, right? Even when inflation is not at their 2% target, right? So we have a weak job market, and then we have basically I don't really know how to say margin chart historical. I mean, honestly, I probably should have had this all up, but I mean, no one's watching the videos anyways. But basically, we have margin at all-time highs, right? And obviously, margin are always going to go to all-time highs, right? But the thing is, right, like you can always make some mathematical, oh, what was the margin here and what was the margin here, right? And then, okay, well, we had this margin here, and then it just kept going up. Like, let's say it doubled, right? It doubled, it more than doubled, then it fell down. And then here, it's basically doubled again, and now it's starting to fall down. Right, here was even less, it wasn't even a double, right? So it's like, mathematically, or like historically, this would be, if it rolled over here, no one would think it's an anomaly, right? Like, okay, we basically went up like 30-40% from here, we doubled these lows over here. That's fair, right? You see what I'm saying? Yeah, even here was like a 30-40% increase. Here was actually like the doubling, even though this looked more drawn out. But here is kind of the same, honestly. This looks like a 30-40%. Like, you can make the argument that this was this, but it's not like that. But I'm just saying, from like a margin perspective, none of this is out of the ordinary if it rolled over starting today, right? Which is saying like the current market is very over leveraged. People are taking out a lot of margin, and it's gonna be at a point where they can't take out any more margin, or a catalyst is gonna happen to where they are gonna cut their margin. You see what I'm saying? Like, there's a lot of leverage in the stock market right now. No one can really deny that, right? And then if we look at the Shiller PE ratio, historical, we're at 44. We're at 40, right? And .com peak was at 43, right? The bubble in the 1929 was at 31, right? 2021 was at 38. So it's like, technically we're even more euphoric. Like, we have even higher ratios than 2021. Then you see what I'm saying? Like, this is a very high ratio. So if this were to start turning over now, no one would really bat an eye. They'd be like, okay, we got to 40, right? There's been only one other time in history where we got to 40, and that was the dot-coms bubble, right? Guess what? Did the dot-com bubble have a catalyst to the downside? No. Do we have a catalyst to the downside now? Yes. And I'll get in the catalyst to the downside. And the catalyst to the downside affects inflation, it affects unemployment, and it affects the margin, and it affects the PE ratio, right? And so, like, all of this looks weak, right? Like, we're over leveraged, we're overvalued, and we have a weak job market, right? Now, I'm not saying that these things alone will cause the markets to fall. I'm just saying that all the pieces are in place for, if a catalyst were to come, then it would probably be pretty devastating, right? Now, obviously, this is just speculation, right? But, uh, but just here, I'm just gonna make my case, right? I mean, obviously, the counter argument here is ever since, I mean, it's not even really a counter argument, but it's that we've been making like higher highs and higher lows, right? And we're continuing to be on an uptrend. We haven't really had a euphoric thing. I would say that this is kind of similar to this, right? So I do think we'll get a valuation shrinkage. I mean, this would be like a 10-point. This would probably see us at 36, which would be like around here, right? And then maybe we stay around, like if we follow this. But I do feel like this, and then this is similar. But obviously it's not gonna play out historically the same, right? I do think we could probably go back into the 20s, maybe even the teens, based on how bad the catalyst is, right? But that's kind of my case about where the macro stands, right? The macro doesn't stand in a very bullish territory. If you actually like take the statistics, what are the 10-year earnings, the 10-year forward returns for when we first get to 40, right? They're not good, right? What about when this starts rolling over? Well, every time this is rolled over, we get a recession, right? So, I mean, that doesn't even look good, right? Now, I'm not saying that this is enough to cause a recession on its own. I'm just saying that the macro data does not look that good, right? It's not beneficial. And now I'm going to talk about the catalyst and why I think the markets are complacent about the catalyst to the downside, right? Now, if we look at, I mean, I haven't written it down, but if we look at like almost every oil crisis, generally the market's correct to the downside. They enter a technical bear market. Sometimes it's 20%, sometimes it's 30%, sometimes it's even higher, like 40, 50 to 60%, right? In extreme cases, right? The IEA has classified this as the largest energy crisis in history, right? It's the largest by any historical measure, right? And the markets are up since this happened, right? Look at the 28. Ironically, the war started on a Saturday. But if you take this, like we are up 7%, right? 7% we're up since the war started for the NASDAQ, right? And oil has been basically around, let's say it averaged $100 a barrel the past month and a half, the past 6 or 7 weeks, right? Like that's like, why would the markets be up, right? It doesn't really make too much sense, right? You have inflation for March already bad. It's basically 12% annualized. And if you look at a lot of historical oil crises, the inflation acceleration usually peaks at month 2 to 3. So technically April will have an even higher acceleration than March did. So let's say March was 0.9 month over month, then April could be 1.2 or 1.1 month over month. It could even be higher, 1.5. I mean, you really don't know, but I mean, considering historical measures, 0.9 is basically the baseline, the best case scenario, right? And then you have the LNG crisis also, which the inflation peaks around month 2 to 4 because the energy and stuff takes longer to propagate, right? So, I mean, the inflation does not look really good. It does not look to be transitory, honestly, especially since we've finished week 7 and the strait has been closed, and it looks like the strait will be closed, and it looks like there are mines in the strait, right? I mean, none of this looks like it's going to end in 2 to 3 weeks, right? Which has been the entire narrative, right? So basically, what I'm arguing is that the macro data doesn't even look good to begin with. And we have this big catalyst to the downside, right? This catalyst that has already caused demand destruction in a lot of Asian countries, and where the US is implementing measures of demand destruction where they're putting gas with I mean, I can say gas less oil, USA. I might have to find it. Alright, well, this is gonna be embarrassing if I can't find it. Alright, hopefully it lets me read it. So, the Trump administration is expected to last a temporal lift on federal smog cutting restrictions on summer blend gasoline to curb rising energy prices. So basically, it will make standard gasoline cheaper by not forcing refiners and retailers to switch to more costly blends, which will basically lower the oil and gas, right? That is a form of demand destruction, right? The change could shave several cents per gallon off retail and provide relief from consumers and refiners struggling with fuel supplies. Yes, so like this is a demand destruction in the States already. It hasn't been implemented yet, but it is going to be implemented in the summer sometime, right? So is the US already going to a demand destruction path? Obviously, this demand destruction isn't huge, right? But you also have other countries implementing fuel, like lowering the speed limit, implementing like fuel rationing, 4-day work weeks. Some schools are going virtual. And then like you have the most vulnerable countries like Bangladesh going like in 10-hour blackouts, right? Like they just don't have the LNG to function, right? And obviously that's going to affect oil. There's a lot of demand destruction going on for oil and LNG, but like both of this together it's really bad, and the markets are kind of expecting everything to be fine in a couple weeks, right? Which they have been doing, but eventually the physical oil will just not be there, right? And it's going to cause some very negative ramifications, right? Or it has the chance to. I mean, obviously, you can make the argument this will be fixed soon, right? But other countries are already looking for a longer term conflict, like South Korea, oil, longer term. I saw some article. This is, I mean, I should have had this ready, but it just might not even last 2 months, right? Like this is pretty bad, right? But this isn't, but basically what I'm trying to say is that earlier in the month, South Korea was saying this will be a temporary crisis, right? But recently they've pivoted for saying, look, even if the strait were to open today, it still takes 20 days for our ships to come. And that's a long time, right? And we can't afford to think this is a short-term conflict. We have to start preparing for the long term, right? And South Korea said this publicly, right? And this is one of like the major nations, because the entire narrative has this will be a short-term conflict. Like nations are already starting to say this will be a longer-term conflict, right? So this is not gonna. It looks like the trajectory of the narrative is shifting, right, to where this will be a longer-term conflict, and the ramifications of the largest historical energy crisis will have catastrophic effects, probably, right? I mean, this is just speculation, right? But I'm trying to put the pieces together, right? So yeah, let me see if I can find the article, right? Last longer. Yeah. So I mean, this is AI, right? But um, yeah. But basically, maybe it was this. I mean, I don't really know what article, but I do remember reading it. Even there is a strong concerns that the shock will persist for a considerable period. To not and push for more preemptive measures. See, like they're already having big shifts, right? Um, they're trying to secure energy. Um, I mean, it's really hard to find the exact article, honestly, but basically, they're kind of shifting their tone. Basically, is what I'm arguing, and this will probably likely proceed, right? Because the ceasefire ends the 21st, and it does not look like they're gonna have a like a deal, basically, right? I think this was obvious the first time that the ceasefire talks failed, right? So yeah, I did write this paper, so I am down. But so this is where I talk about some of the demand destruction, right? Fuel tax cuts, restricting fuel contracts, implementing a 4-day work week, and then public transport free, creating tax credits, capping fuel. I mean, like if we analyze this crisis to other crises based on government intervention, this is already one of some of the worst crisis ever, right? Like, this is very rare that so many countries have come along and intervened like this, right? And it's likely to affect the U.S. as well as Europe and other Western countries, right? Even though the U.S. produces most of its oil, or can produce most of its oil, doesn't change the fact that these countries are going through demand destruction. It's killing their productivity, and in return, it's going to affect imports, exports, since this entire global economy is very interconnected, right? It's like a chain, and if you cut off one of the chains or you cripple many of the chains, then the entire network becomes unstable, right? And the entire link breaks, right? And the U.S. economy all of these economies needs a strong chain link, right? They can't function if the chain link is broken. Basically, is my argument. So like this was like week 6. Like they started doing it. Like, it's not now. They've been doing this like since April. It's week 4. Like they started implementing these measures, and it's gonna get worse. It's gonna spread week 8, week 12, right? Like it's like these oil crises are very non-linear, right? So the duration and the price of oil has non-linear effects, right? So yeah, this is kind of how I talk about how this can affect the USA. Basically, is what I'm saying is that jet fuel. South Korea actually gets most of its oil from the Strait of Hormuz, and that takes around 20 days in a worst case scenario, right? And then it ships the refined oil to the USA, and that takes around 20 days. So that's 40 days, right? And guess what? That physical supply would actually start showing up mid-April. So actually now, right? Where we actually stop getting jet fuel from South Korea, right? That's going to have effects, right? Yeah, so kind of talk about it here. I'll actually be right back. I'll go do something. Wait, can I pause this video? So surely I can pause it, right? I guess I'll just wait, I guess. But dang, wait, I wish I could pause this. Let's see. Can I pause recording in OBS Studio? What? To start recording on there. Stop. I don't see a pause though. Settings. I guess I'll just make a key. Wait, key should be, I'll just do P for pause. Then unpause will also be P. I'll apply. I think this should be pause, right? Doesn't look like it's paused. Wait. Oh, this is kind of embarrassing. What if I mean, whatever. I guess it's not that serious. I can wait. Like, this guy has to be trolling. What? Where's that button? What the fuck? What? Oh, wait. I think I know. This probably has a pause button, right? Yeah, I mean, this is kind of ridiculous, honestly. Same as stream. Oh, okay. Like, come on. Where do I find the recording? Wait, recording. Doesn't say same as stream. General? I'm gonna low key if this takes like long enough. Ensure your recording settings are not set to setting outputs. Setting, and if your output mode is set to is not. I mean, I did, right? Fuck. So, recordings. No! Oh, it's because I'm recording now, so I can't. Alright, whatever. I don't need to go anymore. Whatever. So yeah, whatever. A 3-day work week. Alright, this is what happened in 1973. So, free car Sundays, fuel rationing, lowered speed limit, 3-day work week. Wow, that does sound very similar to what we're doing now, right? Currently, we're 6 weeks and 10 to 12%. Yeah. Wait, and this here, I kind of talk about uncertainty and oil shocks. Basically, well, I mean, I don't really want to explain it, but basically what we're pricing in right now is certainty, right? This oil shock right here, it is certain it will end, let's say, before here, or it's certain it will end before here. I mean, obviously the goalpost is being moved, but for some reason, the narrative has been able to keep it certain. Certain it will end here. Certain it will end here. Certain it will end here, right? They do keep on pushing past the goalpost, but the oil situation is a certain crisis, right? Which does have big effects, right? The Dallas Fed basically said that basically for 3 months of closure, this is just gasoline, right? It would add like 0.34% to core PCE, but right, this is 9 months. 9 months for a certain oil shock, right? But if it's an uncertain, just 3 months will add 1 point. So it's basically 3 months is similar to 9 months, and a certain. Does that make any sense, right? 3 months of uncertain oil crisis will have the same inflationary pressure as 9 months of a certain oil crisis, right? So right now we are 2 months in a certain oil crisis, but I suspect that somewhere along this line, right? Somewhere along this line, the narrative will break, and oil, like I don't want to trade oil, but basically the strait has been closed. The strait basically has shown to continue to be closed. The Straits is mined, right? And we're still at war with Iran, right? Eventually, the narrative is going to break here, and this is going to shift somewhere along here from a certain oil crisis to an uncertain oil crisis, right? And it's going to have a lot more pressure on inflation. It's going to have a lot more pressure on everything, right? Because everyone is going to be like, okay, well, if this is uncertain, this could last 6 months. It's going to last 6 more months. It's going to last 12 more months, right? People are going to start pricing in the tail, right? Which is rational to do, right? And the tail doesn't usually happen, right? But people start pricing it in, right? And this entire crisis, people have been pricing in the other tail, right? The best case tail, right? This is not even base case pricing, right? So even if the base case does happen, then oil is basically guaranteed to go up from these levels. Inflation is continued to go up, stuff like that, right? And it's only in the base case where this continues to play out, right? But I don't think the best case is going to happen given what I just explained, right? Could happen, and if it happens, I'll be wrong and I'll lose a lot of money. But in my model, the best case is unlikely to happen, just like the war going on for over 2 years and the strait being closed for over 2 years is very unlikely to happen, right? In all likelihood, this will probably last somewhere between 4 to 12 months, right? Somewhere around there. We're on month 2, right? And I expect Trump to really start to cater once the Fed switches rhetoric right now, because the rhetoric for the Fed is that this is transitory inflation. Well, it's going to keep on going until the inflation isn't transitory. When April CPI comes in, and it comes in at, let's say, 15% annual, and now we have CPI at like 4.5 to 5% annually, the Fed's going to have to do something about that, right? Doesn't matter. At that point, it doesn't matter, right? And then you have May inflation coming in. Well, guess what? Right, and if it's at even the same, right, you're gonna have 6. You're gonna have 5.5 to 6%. Right, that's catastrophic, right? And this all happened in the course of 3 months, right? Like inflation is just gonna go, and this is like another 2 months, right? Like inflation is just gonna go crazy, right? Even if the crisis ends, you still have the shipping times, you still have that, and you still have the mines to clear, right? Stuff like that, right? So my prediction is that somewhere this crisis is going to turn into an uncertain oil crisis, right? And oil might go parabolic, and I honestly think energy will go pretty parabolic too. I mean, if you actually look at it, this war started the 28th, right? We're at the same levels, right? Like what? This makes no sense. Right? This makes no sense, right? Even if the best case happens, what about all of these oil profits, right? And if you actually go into the futures, right? Oil is predicted to stay in the 80s until August, right? I mean, this looks pretty stable, right? Honestly, this kind of looks like a bull flag, if I'm being honest. But see what I'm saying? July 80, right? I mean, they have a whole summer of oil at 80. Well, according to the best case pricings, in my opinion. If you look at spot is at 84, right? So it's like you really can't get much better, right? The spot and the 82, right? All right, if you look at crude oil for the next month, 83. So basically, the spot pricing of oil is lower than oil next month, and then it evens out in 2 months ahead, right? And then it gets lower 3 months ahead. But basically, what we're pricing in right now is literally hopes and dreams, right? Like oil is predicted to go up next month, right? Which makes no sense, right? Because the crisis is technically over, right? You see what I'm saying? I'm saying we're pricing in the best case scenario for oil, right? And the best case scenario is likely not to happen, right? All of this 83 is basically, oh, well, we blew up a bunch of oil facilities. It's gonna take a while to get the straight back moving. You see what I'm saying? That's basically my argument, right? But yeah. So right now we're pricing in 100% certainty, and that's likely to change. The third is the LNG shock, right? Right now I've mainly been talking about oil. The LNG shock is basically unlike anything the world has seen, and there's not much workarounds. Like you have the pipe in Saudi Arabia that does however million barrels per day, right? But LNG doesn't have any of that, and LNG basically runs the electricity of many countries in the world, right? So without that LNG, forced demand destruction is going to happen while prices skyrocket because there's not enough supply. Basically stagflation, right? Same thing for oil, right? Now, there's not too many researches on LNG crises, maybe because they're not historical. But the market is pricing in that this is nothing, right? This is nothing, right? And basically, it very well could be nothing. But right now, this is kind of how I see the markets, right? Like, let's say I had a grenade, right? Let me do photo P. Let me draw this out for you. Shit. No, I just want a black. I just want a white screen, Loki. Shit. Yeah, just white. Create. Alright, look. This is me. I don't know why I had it at pink. Let's just say at black. Then let's make this a little bit smaller. Alright, this is me, right? I don't have a head, right? But basically, I have a grenade, right? I have a freaking grenade, bro. And It looks like a coffee mug, but it's a freaking grenade. And there's like fire. And it's about to explode, right? And I'm like, let's say I'm like 10 yards, right? 10 yards is pretty far, right? And there's this trash can. And basically, this goes off, and let's say it goes off in 5 minutes. 5 minutes, right? And basically, if I throw this, or 5 seconds, right? 5 minutes, right? 5 minutes, right? I throw this in here, and if I make it in here, because this is like some super steel thing, everything here is fine, right? And you're standing right here, right? You're standing right here, and you're like, and I'm like, hey, look, before I throw this here, before I throw this in the box, I don't know what my chances are. I don't know what my chances are of making this in the box and nothing blowing up. And you're here, and I'm like, hey, do you want to get out of the way, right? Do you want to get the fuck out of here? Because if I miss this, you're being blown up, right? And basically, if you ask most people here, you're like, yeah, I'm getting the fuck out of here. I don't care if you're Steph Curry, right? I'm getting the fuck out of here because I'm not risking my life for something so stupid, right? And that's why in many cases, right, you have the April crash, right? No, people are like, what the fuck are these tariffs? I'm getting the fuck out of here, right? I don't know what these tariffs are gonna have on the consumer. I don't know. I haven't seen global tariffs before. I'm getting the fuck out of here, right? And then let's take the July, the yen uncarry trade. The people started worrying about the yen uncarry trade. Oh, there's so much leverage in the yen carry trade. I'm getting the fuck out of there. I don't know how much leverage is in the stock market because of the yen carry trade, and they're raising rates. I'm getting the fuck out of here, right? Basically the same thing, right? But oil was a bit different, right? Because it was a real conflict, right? So people got the fuck out of there, but then they eventually ended up being right because this actually had negative pressure on the economy, on productivity, etc. Here I think was like China trade or something. One of these were China trades, right? People got the fuck out of there, right? Then it eventually recovered, right? I don't know all of the conflicts, right? But usually whenever there's a scare, people get the fuck out of there, right? Right? Like you always just want to get the fuck out of there, right? But sometimes, right? Let's take COVID for an example, right? China went into a lockdown here. China went into like a lockdown here. Or maybe it was here. I forgot where. But the market just kept rallying up, right? The market was like, oh, you go shoot that. I'm sure you'll make it. And if I get blown up, who cares, right? And guess what? Eventually, COVID came to the U.S. and people started entering like lockdowns and stuff, and then the market went into a complete free fall, right? But that was because people didn't price it in beforehand, right? People just stayed there, and then whatever I missed, people got the fuck out, right? But it's too late then because they all got blown up, right? Now I'm kind of arguing the same thing here, right? Here, we have like one of the largest oil crises in history, and we also have a very large LNG crisis, one of the largest in history also. Largest energy crisis in history, right? And the markets are up 7%, right? Basically here, the world and Trump is like, hey, if I make it in here, everything's fine, right? Everything's fine. You don't need to worry about it. And everyone's here is like, okay, I'll trust you to make it in, right? I'll trust you to make it in. And guess what? If you don't make it in, then I guess we're all fucked, right? But no one's pricing in or we're all fucked. Everyone's pricing in, hey, Trump's gonna make this, the U.S. is gonna make this, and everything's gonna be fine, right? No one's pricing in the tail end for what happens if they miss and it gets thrown on to everyone else, right? No one's pricing that in, right? And that's kind of the divergence I'm trying to argue on in the trading side. Like, hey, there's a big divergence happening, and it's likely and it's likely to end well for the people betting on the downturn, right? Because if you really look at it, I mean, even the betting markets, in my opinion, the betting markets are wrong, and the betting markets are repricing stuff every day, so it's hard to get an accurate. But look, the Strait of Hormuz traffic returns to normal by end of April. It was 9% at the beginning of April, right? Then you have the ceasefire, then you have continued talks, you have the Strait of Hormuz being open when it's actually not, and then Indian ships get attacked when they try and cross the strait, and then it immediately reprices, right? And then you have May at 68% when it was 81% yesterday. But in early April it was 30%, right? So, I mean, obviously, the chances here are always shifting, right? But the market isn't even pricing this in, right? Like, I mean, obviously there's low volume, but you see what I'm saying? Like, let's take something more for volume. Like, let's see permanent peace deal, right? When a permanent peace deal happens, then they will still have to clear out the mines and stuff like that, right? So it's not likely to happen at the end of April, right? Keep in mind, the U.S. still has to clear out the mines, and it's unlikely that we've seen that they will actually open the strait during a ceasefire, because this entire ceasefire, they have not opened the strait. The global economy has still suffered this entire ceasefire. They just stopped attacking each other, right? And then May, it's still 61%, right? That's not something, 61%, right? 61% and May 31, right? And the market's rallying 7%, right? Like, it doesn't look like they're taking these odds seriously. If you look at the market, I'd say 80% April 30, 100% May 31. See what I'm saying? Like the odds are not being respected. And guess what? If they don't come to a permanent peace deal by May 31, they're not doing it by June 30, right? So the tail end becomes crazy. This is a 30% chance there's not a peace deal by June 30. Right, but most economists have been predicting if this crisis goes into the summer, there's going to be a global recession, right? But this basically gives us a 31% chance. I mean, obviously the volume here is low, so it's hard to say. But you see what I'm saying, right? Like, the chances are not that good, right? As the argument I'm trying to say, right? And obviously this will be repriced, but I'm saying the market isn't even considering the tail risk, when the tail risk very much does exist. And even I think this tail risk is very, very optimistic, right? So, yeah, I mean, I kind of went off on a tangent, but the LNG shock is real. It's causing real demand destruction like we haven't really seen historically. And it's likely to have impact on the economies and GDPs of the countries being affected, but the market doesn't seem to care, right? So here's current complacency. I've been talking about current complacency. I kind of talked about what the market is pricing in right now. So market, March 30th, they talked about transitory inflation, right? That's when Powell himself said he thinks the conflict is short and inflation will be transitory. The market ended up rallying. There's a ceasefire here. So the market's obviously pricing in the conflict ending soon, right? And then even this gap up was the Strait of Hormuz being open, when technically it's closed because Indian ships just got hit, right? So there is that, yeah. And then... yeah, so I kind of talked about complacency. Then, what did I talk about? Yeah, so then I talk about how it's COVID, how people aren't really preparing for the tail risk when the tail risk very much exists, right? Here I'm talking about positioning. Honestly, the best positioning I have found, which would be, I mean, honestly, I did this earlier, so I am actually down ironically, but it's fine. Because the macro still like if the macro changes, then I'll change my thesis, right? But currently they're not. So here, yeah, I bought these at like 1440, so I am down since they're 1070 right now. Yeah, I forgot where. I think I bought them. I think I actually bought them Monday. I forgot where. Yeah, so I probably bought them like around here, and then they just fell here or here. I think I bought them Monday, and then they just kept falling. But it looks like someone wanted them here, because if you actually look at it, even though the market was up, this got bidded up a lot, right? So I mean, people are obviously positioning themselves accordingly. This is for the market going down, and then we look at 3 months of data, and then renegotiate if this is worth it or not, right? Because that 3 months of time is a lot cheaper than like 0 to 3 months, right? So I was thinking, I have a pretty big size in this, honestly. And then here, another contract I was thinking of is August. Maybe honestly, I might increase it to do like late September, and then I was thinking about like a $60 call, and then this is $2, right? I mean, obviously there's not any volume, but there has been a lot of volume here actually, right? And then we went up, and then a lot of volume here. So there is volume, right? It looks like a few key players are buying a bunch, in my opinion, or selling a bunch. I don't really know, honestly. But yeah, so I thought that was interesting. I feel like this would be the best. I mean, obviously you could play it out a bit farther, a bit closer, like maybe July 17th or something like that. I mean, if you look at that, like that's crazy, right? And someone's buying a bunch of those, right? These are at $1, right? And these were six, right? So I mean, obviously someone thinks something's gonna happen pretty soon. And I honestly agree, right? Who knows though? Who knows what really happens? I mean, those 30 months are pretty expensive actually. But maybe that's because 90 days versus, at a certain point, the 90 days kind of looks like a better deal, honestly. Anyways, yeah, I might have to try and pause this again, but yeah. So, and then I talk about the mines. Basically, the U.S. is underdeveloped in mine control, and it's likely to take months to clear out the mines. And then, yeah, talk about this. And then I kind of wanted to talk about this, but the IEA themselves have been talking about how physical oil has been going near $150 a barrel, right? While paper is at $80 a barrel, right? Data crude was trading like insane levels, right? And then it talks about how we had a 10 million supply decrease, and then basically other stuff, but it's very important, and I actually have to go really quickly. Yeah, but that's kind of, I think I talked about all the stuff I've been thinking about. It's a long video. So yeah, thanks for watching if you did watch it. And these are my opinions on the market and the future of the market.